we agreed in the last session is we need to encourage cash, early payment, give discounts, more products that we're able to sell to our business, to our customers out there, just to keep on increasing our cash flows. The other thing, again, as we try to grow our cash flow, is to say, let's try as much as possible to avoid credit sales. Yes, we know there are those customers that we have to sell on credit, but you want to see the duration. You need to check on the limit that you're selling out there on credit. The other thing, to boost our cash flows, increase rather invoice in time. Don't waste a lot of time waiting for customers to pay. Please check on your database and check who needs to pay at this particular time, invoice in time. The other thing, timely debt collection. Yes, if someone has an issue that needs to sort you when it comes to debt, please collect the right time. The other thing we agreed as part of boosting our cash flows is practice cash flow planning. Yes, you need to know that I need to be paying this amount of money in the next 1 or 2 weeks or 3 weeks or 1 month. You need to know how do you ensure that you have consolidated all your cash to ensure that you are planning cash flow planning, or you are exercising cash flow planning. The other thing, and this is also very, very important, we have seen ourselves do a lot of loan mismatch. Please avoid loan mismatch. And the reason as to why we are here is to tell us, are you taking the right loan solutions for the right products? Part of the reason as to why people miss out on cash flows in our business is because you are taking a loan to go purchase a property that is very, very short term, that eats into your cash flows. You find yourself paying a lot of interest. You find yourself increasing the repayment amount, which drains your capital or drains your cash flows. So you want to say, are you taking the right loans? Are you avoiding loan mismatch? Make sure that you go an extra mile to get the right loan for the right purpose. And so this is going to drive our next part of discussion to say, are you leveraging on some of the products that we have? And today we are talking about leasing for business people. And our presenter today will be none other than Jackson Gary. Jackson works with us, as I said. He's a manager leasing in CoBank. He'll be telling us some of the things we need to know around leasing and why should we go ahead and use leasing and not asset finance, not any other product. So Jackson, I want to ask a question to you. First thing, what do you consider to be the advantage of leasing? Why leasing and not any other product? Jackson, if you're here.
Thank you, Peter. Am I audible enough? Thank you, Peter. I think for me to start is leasing comes in hand in terms of what you've already taught us about, in terms of the cash flow management. Also, we all know that leasing is whereby we pay to use an asset or a property. So we don't need to eject cash on that property in terms of ownership. We are also not affected by the total ownership, the total cost of the ownership of the asset. So leasing is usually a major cash flow savings product whereby you are able to use the asset to optimize the asset in terms of the operation without necessarily injecting the cash on that particular asset. Thank you very much, Peter. Back to you, Peter.
Thank you, Jackson. Thank you, Jackson. And you forgot to put your camera. So you want to come on camera as you go ahead? Yes. But I think, so you're saying leasing is one of the products that you want to consider when it comes to you ensuring that you have enough cash flow for your business and you're avoiding any loan facility that is going to eat or drain your cash flow. Maybe the other question I have for you before I give you the whole time to go ahead and do the presentation is, then what is the difference between leasing and asset finance?
Yeah, thank you very much, Peter, for that question. And I think as we all know that most of us in business, we are all used to the normal asset finance. Asset finance, we all know that it's whereby you go to the bank and get a facility to purchase the asset to your ownership. But when it comes to leasing, is whereby you approach a leasing company so that you can be able to have the right of usage of that asset, and then you'll be paying on a rental-based arrangement. And then after the lease period, you can be able to return the asset or renew that asset with another one, depending on the efficiency and how the operation of that asset is according to the operation that you're doing. So basically, the difference is that asset finance is where you're getting a loan from the bank and purchase the asset. But for leasing, you're going to the leasing company and getting the asset that you'll be paying for a period of time. So that's basically the difference of asset finance and leasing. Thank you, Peter.
Okay. Thank you, Jackson, for that introduction on what leasing is all about and how it is going to help us do business. And I think at this time, I want to hand over the session to you to continue and just tell us the details about leasing and what we need to do so that as customers, as people in business, they can take advantage of the same. Over, back to you, Jackson.
Thank you very much, Peter, for that insightful presentation on the cash flow management. And I think each one of us have learned one or two things that will enable us grow our business in terms of managing our cash flows and making sure that our business is growing gradually and making profits that will benefit even the larger economy in the country. So today, my name is Jackson Gary. No, Peter, you've done an introduction. I'm the manager leasing in Coop Bank, based in business banking department and asset finance. And I'm glad today to have you in this webinar session, whereby I like to deliberate this proposition, the leasing proposition to you, so that it can be able to assist you in terms of tackling your day-to-day activities in your various businesses. In Coop Bank, we offer a leasing proposition through a company called Coop Bank Freight Africa Leasing. Coop Bank Freight Africa Leasing is a company that is a joint venture that was started in 2018 to support our customers in leasing. It's a joint venture between Cooperative Bank and Super Group, which is based in South Africa. It's a company that now operates in Kenya. And this company is usually get support from the bank 100% in terms of even the appraisal to our clients. So basically, that's how we do. That's our structure in terms of leasing is in the bank. First of all, I'd like to take us through to understand what is leasing. And basically, as I've said, leasing is an arrangement whereby a person, a company, or even an entity pays to use an asset for a particular period of time. So what are we saying? We are saying that you approach to us, you tell us this is the asset I need, and then we start the transaction whereby we give you the asset and tell us the period of time that you want to use the asset. Then you calculate to you the the payments, may it be termly or monthly, then we're going to tell you in a month, you have the right of usage of that asset, but you'll be paying this amount of money. So these regular payments in terms of rentals are basically calculated depending on the total cost of the asset and how you're going to use that asset. As a customer business, this makes a great sense, particularly for those who want to acquire vehicles, machineries, equipment, for a period of maybe 3 or 2 years or 5 years. We all know that new assets are more efficient. They are more efficient in terms of operation in the business. We all agree to that. So leasing comes to give efficiency, whereby if I'm doing a business, maybe in transport, I'll like a truck when it's new. When I use it for 3 years, it's more likely to bring me a lot of money in terms of even the trips that I'm making, customer service, good customer service to my client, whereby I will not be involved in some breakdowns and all that. So after maybe 3 years, that truck may start bringing some mechanical problems. So here we are saying, you can come to us, bring us, say you want this particular asset, you want to use it for 3 years. And after that, you have an option of acquiring a new asset. So your business will be having new fleets or new vehicles that you will be able to renew each and every time you want. Unlike the other option for asset finance, whereby if you purchase an asset, you have to live with it, regardless of the issues that may come up as the aging of the vehicle or the equipment go along. Thank you. Just very fast, I'll take us through the leasing structure, how it operates. Leasing, we have 3 parties that are involved. First, we have the bank, which is the financier of that particular asset. On our case, we are the Cooperative Bank of Kenya. We are the one who will finance the purchase of that item or asset. The other parties is the leasing company. We have said we particularly deal with one company, that is CoBank Fleet Africa Leasing, to do our leasing transaction. And there comes now the business owner. That's the owner, the consumer of the asset. Now comes the customer. Those are the 3 parties that are involved in that transaction. There are 2 elements that I would like to talk to. This is the leased asset. The leased asset is particularly what you want to be given right of use to. And this is it may be vehicle, machinery, or equipment, all that, or land. So in our case, we have assets like vehicles, we have medical equipment, we have solar and all that. The other element I would like to talk about is the period, the lease period. That one is very key, because this speaks to even the amount that you're going to pay. So the lease period is the time when you come to us, you want the asset to lease an asset. We will be concerned on the lease period, because the more you use the asset, the more you are likely to pay more. The lesser the period, the lesser the amount that you're supposed to pay. On our case, we usually encourage our customers to identify the asset, and usually take the new assets only. You go identify the asset, because now you're the consumer of that asset. So usually encourage that you go and look for that asset yourself and bring us the quotation, so that now, depending on the total cost of the asset and the way you're going to use that asset, we can be able to quote for you the monthly payment or the term repayment, depending on the cost of the unit or the equipment. On the set, and something else I want to talk about is who can we lease to? When we are doing our leasing transaction, who can we lease to? And I was looking at the comments, the chat on the business that some of us are doing, and I can see really we have the right team for this transaction. First is MSME. We're dealing with MSMEs here. We have transporters. I saw somebody doing transport. That's one person that we can be able to onboard on this product. Transporters here, we are looking at even the long distance trucks that we can be able to onboard. You can lease those trucks maybe for a specific contract that you have. Maybe you have a contract that is going for 5 years or 3 years. You can be able to give you a fleet of 50 trucks, 10 trucks, 20 trucks, depending on how your client request is, and be able to, after the end of this period, you can be able to return those trucks, or we can do an extension of the lease. And also you can own the trucks. That is one insight I wanted to pass across to you. The other one I wanted to talk about is supermarkets. If you're in supermarket business, you are good. These as transactional a product you may also like to enroll and even onboard. We onboard you on it because we have we do equipment. Technological equipments. These are the laptops, printers, photocopiers, CDM machines, the cash deposit machines. In your supermarket, I think that will go a long way in terms of even security of the cash before it's banked. We also have hospitals. Hospitals, we do medical equipment. These are equipment that are used in the hospitals. We also do them under leasing. For the farmers, yes, these are the agricultural equipment, the tractors, all that, those machineries. Yes, we do them. We will also be able to support you when you come to us if you want to lease that kind of equipment. The other people we look at manufacturers. For manufacturers, these are I know manufacturer, majority of them need some vehicles in terms of even the delivery of their products. Yes, we can be able to support this. Very fast, hospitality. These are the hotels. We have tour funds and all that. Those are the ones that maybe the ones that need to do the airport transfers and all that. We'll be able to support. Staff buses and all that, we are able to support in that line. Another line I would like to comment about is the school buses. I saw someone who is in school, and I think for a school, yes, we are doing 100%. That is for 72 months. And basically, for school buses, it's a venture that will see it very much good in terms of even what you're going to pay, because the way the bus is used, it just it's very, in terms of usage, it's not too much as opposed to other assets, because for the school you just ferry the student in the morning and then return them back in the evening. So in terms of even the cost, it's a bit lower. Number 2, we have salaried customers. We also do, for salaried customers, we do new units and secondary units. These are vehicles. If you're salaried, you can be able to support also on the leasing proposition. The other one is the cooperative circles. Yes, we do cooperative circles. And actually, I know a majority of us here may know that we really supported a lot of circles, transport circles, in terms of acquiring new units in PSV. We've done quite well, and we are really we have really supported a lot of customers there who are SACCOs. For PSVs, yes, we are doing that. We also encourage the individual customers that may need maybe 1 unit or 2 units in PSV. We also encourage them to join us. Don't fear to come to the bank to get 1 PSV vehicle. We can be able to support you on that. We just need to get a letter from the SACCO that is using with the LSL, that is the route service line that will give you that letter, and you'll be able to come to us and we'll be able to support you. Identify the SACCO that you want to take your vehicle to, and then you get that letter and we'll be able to support you with that unit. The other customers, we have corporate customers. We can be able to support in that line. The investment groups and FCS, we can be able to support in that line. I would like to tackle this. Why should you lease? Why should you lease as a business person? First of all, I'd like to thank Peter for that introduction, because I think that was basically the main benefit for leasing, the cash flow management. We all attest to know that owning a capital good is very expensive. Actually, most of us don't look at, after purchasing an asset, we don't look at the total cost of that asset during the period, the age of that asset. First of all, there are some of the costs that we usually assume. For example, the maintenance cost, the insurance, the taxes, the depreciation cost in our books that is involved in all that acquisition of that asset. For example, for us in leasing, we are able to make you plan for your business in terms of what you're going to pay. For example, if you come for a leasing, you're able to quote for you maintenance quote and insurance, and then you can be able to plan of what you're going to pay throughout the period. Unlike if you're owning the asset, if a major breakdown comes and maybe it's a quarter of the total cost of the unit, it may eat into your capital. And even you find yourself struggling because now you have ejected the money in that. It's an emergency that has come and you have ejected a lot of money in that specific transaction. So for leasing, we are going to give you a schedule that we run throughout the leasing period. And that's a schedule we're not going to earn anything, regardless of the breakage, and that goes much higher. We are ready to foot that cost because we already engaged in an agreement with a certain amount of money. So that one saves you emergency cash flow and even injecting capital too, which will eat to your working capital. The other thing I would like to comment is expansion of fleet efficiency. Remember when I was talking, I was talking about a new fleet is more efficient as opposed to an old-aged vehicle, whereby an old-aged vehicle, even the trips that can make in a day, you find that if you try to overuse it to become, it can break down and even make your goods are not well delivered, all that. And I think your customers may not be happy with your services. So I think for new asset, that's the new vehicles, you are assured that you can be able to make more trips. You can serve your customer well without any obstacle or any breakdown. And that one gives you more profit in terms of your operations and even what you're doing. The other thing I would like to talk about is on the tax benefit on leasing. You attest to me that for leasing, it's more beneficial. We call it a clever way of avoiding tax. Why? Because remember, this asset is off your books. I know a majority of us who know accounting, you know that this is off your books. And now you know that in terms of the tax, the taxable income will be a bit less, because these rentals you are paying on every month, these rentals are expenses in your books. So you're going to have 100% right of usage of this asset, but again, you also benefit on the tax element because these rentals will be tax deductible. So that one, if you're having maybe 50 fleets of vehicles, those will be off your books, and you'll be able to save that one on in terms of the total tax that you'll be able to remit in the government. Number 4, we are flexible in terms of the end of term options. We do lease to own here. You know, we Africans, we are so much attached to owning the assets. So we will not review behind the ones that will need to own the asset at the end of it all. We also offer a solution for that. We give lease to own as the end of term option. But again, we also encourage people to do lease to return, whereby you can be able to get another new or a more technological and advanced equipment or unit. So we do also lease to return at the end of the lease period. We can also do the secondary lease. Secondary lease, it's all about when you at the end of the lease period, you are able to come to us and tell us that this asset is in good condition and I would like to continue using this asset. So what we do is just adjust the rentals to be a bit lower because now we base the total cost of your unit is a bit low. So we just base our rentals on that. The current total cost of the unit. So that one usually is an advantage because now you see you pay less rentals as opposed to the other contract that you had before. Then number 5, I would like to talk about hedge against obsolescence. That is, in leasing, you avoid the headache of disposing the assets. You are just to know if you are handling more than 50 assets, maybe more the asset, for example, trucks or school buses. You have maybe 10, and when it reach 7 years or 6 years, you find that the maintenance of this asset is a bit too much demanding and a lot of breakdown and all that. So what here comes in is that you'd like now to sell those assets and acquire new ones if you're owning them, if you had owned them before. So you find there is a lot of activities. You want to refurbish the buses so that they can come up with good money. You go to the repairs, you put new wheels, you put a lot of paint, you use a lot of money in terms of even making that asset look good so that it can bring you some amount. And that we're coming in leasing and saying that that headache will not be new because now you just returning the asset to us and we will now be disposing that asset at our own will. And now you are free to go there in your business and acquire new fleet that will be able also to support you to acquire. That one, it's a bit good, maybe for customers who are handling very many vehicles. And I know you can agree that there is usually headache in terms of disposing an aged vehicle, whereby even getting a buyer is even a problem. And that brings a lot of headache even to the transport department. If it's a school, trying to sell the bus is not going. And that brings a lot of issues because now you have injected some money there by repairing the bus, putting more new wheels, painting the bus at least to look good, changing the gearbox, all that. And now you take the bus there, it's not being bought, it has already eaten your money. So that one, we free yourself from that, be able to concentrate on your core business. If it's school, you will be able to concentrate in learning, in giving education to the students. The other advantage is the leverage on technology. I think more so, for example, for the vehicles, you find that maybe we are starting, things are changing very fast in technology. The other day we are in Euro 2 vehicles, now we are to Euro 4 and we are going on and on and on. You may find that you acquired a bus for Euro 2 Now, maybe after the 5 years of your lease period, is another new advanced vehicle for maybe Euro 4. So if you owned the asset, you have no option. You just need to stay with it. But for leasing, we are saying, at the end of the lease period, you can bring the bus to us, return it, and we give you a new, more advanced, and even you can go to Euro 4, the one that you think will be more efficient in terms of your operations. Very first, I would like to talk about the products and features. What are the products that we are offering on leasing as Cooperative Bank? We've talked about PSV vehicles. For PSVs, we've supported, I know some of these colors, you have seen them outside there. Yes, we have supported those customers, and really we've seen those customers grow because of this proposition. Our terms, I'd like you to take note. Just in a nutshell, just show you how attractive our product is. We do new vehicles only for PSVs. And this, what happened is that you go to the dealership and we just come up with an invoice. We encourage customers to go and look for their own preferred units, but it must be new, that is 0 mileage. Then from there, you come with it, and we'll be able to quote for you the monthly rentals that you'll be able to pay on each and every month. For this one, we are doing lease to own, because majority of the customers that we give this PSV vehicle are the SACCOs. We do lease to own. Now that we do lease to own is we require you to put a deposit of 10%. And after that, we'll be able to finance you 90%. The tenor will be 48 months. The period of the loan period will be 48 months. Yeah, then the vehicle will be required to have a comprehensive free cover insurance as per se. Then there is this residual value. A residual value is the estimated total cost of the unit at the end of the lease period. We encourage the SACCO members of the SACCO to maybe build up this amount over time for a period of 12 months, so that now at the end of the lease period, you can be able to transfer these funds and clear the residual value, and then we transfer the ownership of the bus to you as a SACCO, or we transfer to the specific member that wants to obtain or to own that SACCO. For corporates, we can be able to support you to get private cars for your directors, and even for the normal office operations. For this one, we check for the cars that are 8 years old and even the new units. We do 100% for the salaried and 80% for the business customers. This one, what we look at here, we are looking at the model and even the utilization of that particular asset. The end of term, this one we are flexible, and like the PSV, you can return the asset or do an extension of the lease, that is the secondary lease. We do a maximum of 36 months, and the vehicle must be comprehensively insured. I talked about this. I'll go very fast. These are the technological equipment. We have laptops, cash deposit machines, printers, and POS. Yes, we can support you. I know majority of us in our offices use laptops, and also majority of us use this cash deposit machine, maybe the supermarkets and even the big companies. We can be able to support you with this to list this equipment in your business. For this, we do new ones. We don't do second hand. We do 100%. we estimate the residue value. We said the residue value is the estimated total cost of the unit at the end of the lease period. So this residue value gives us helps us to calculate the amount that you're going to pay on each and every month. So we said leasing. Remember when I was starting, I said leasing is paying for usage. So you're going to pay 90% of the usage of the asset. So the 10% we encourage, if you want to own the asset, you build up this amount, and at the end of the lease period, you just transfer that cash, and then you transfer the ownership of the asset to you. The maximum period of this is 36 months, and we usually encourage, we comprehensively insure the asset. The other one is on agricultural equipment. On agricultural equipment, these are the equipments, these are the tractors, and even you do excavate. I heard somebody saying that he does that kind of business. Yes, we can be able to support you to lease this kind of asset. For this one, we do new asset. Yes, 100%. Residue value, we estimate it as 20% because basically most of these agricultural equipment work in hours. So even in terms of the utilization, it's not too much as opposed to the normal vehicles whereby they are always on the road. So we usually increase the residue value to about 20%. Again, we encourage, if you want to own the asset, you build up that 20% over the period of 36 months. So that when you finalize the leasing contract, you can be able to transfer that asset to your ownership if only you want to own the asset. If you want to return, just return the asset, acquire a new one, then we engage in another contract for a period of time of your choice. We do for 60 months, and we encourage to have a comprehensive insurance. Good, here we are, commercial vehicles, leasing of commercial vehicles. These are pickups, trucks, prime movers, tippers. For this one, we do between 100% to 95%, depending on the model of that asset. So for this one, we support you for 60 months. And again, on this, I know majority of us are in transport, whereby you want 5 trucks, and even one, we can also do one. So for this one, we encourage leasing, because again, you don't need to have those assets in your books, whereby you are paying, decreasing on your tax. Again, also you have the tax is going up, and even the breakdown, you find sometimes when the breakdown comes and then it goes high, you start injecting your capital there. Again, when you go for a loan, you'll be required to some deposit, a huge amount that goes to eating your capital. And again, you start now struggling with where to get the working capital, which already you've injected on the asset. So here we are saying you not necessarily need to inject capital on that asset. You can have the right to use the asset with options. You have the option of owning the asset. You have the option of returning the asset. You have the option of even continuing the secondary lease. So that's the main advantage, is that when you don't need even to do that deposit, you can acquire that truck, that prime mover, that tipper, that pickup without injecting any deposit when it comes to leasing. And you can see you can do that, and at the end of it, you have the options on how you can be able to even acquire the asset to your ownership. We do for 6 months, and they must be comprehensively insured. I would like to cover on school buses. On school buses, this one is a very enticing product, and I think the ones that are engaged in schools, this one is the best, because we see you are extending up to 72 months. and we are doing 100%. So if you want to have a bus today and you don't have, maybe you have committed your cash in your business fully, and you want to to acquire a unit, what we are saying here is that you can be able to get that bus immediately without even sourcing for that deposit. You just need to come to us. We support you and be able to give you a good and favorable terms, because we usually encourage, for schools, we usually match your cash flows. That is on termly basis. So we tell you in this term, you're going to pay this, and this we can include, we include maintenance, we include insurance, and even the financing bit of it. So you'll be required just to remit the amount, and then the time that you're receiving the school fees or the cash in your business. So basically, that's all about the school buses. We encourage, let's explore this product in the schools, because as you can see now, we've extended the period even to 72 months. This is guided by the fact that the usage of the bus is not so much as opposed to the other assets. You find that most of the time the bus is parked and even it's not being used so much. So even after the 72 months, you'll find even the bus is not too much used. So if you come for a secondary lease, we can be able to support even to do a secondary lease with a very low and even subsidized rentals, bearing in mind that now you will have even the total cost of the bus will have gone lower. On medical equipment, yes, we are in it. We are doing 100% for new equipment. This one, we are doing a residual value of 20%. So if we give you a residual value of 20%, your rentals will be based on the 80% of the unit, of the total cost of the unit. So you're going to pay for use for 80%. Then end of term, you can opt the 3 options that I've talked about. Then you can have a collateral build-up if you want to own the asset. 10 or 60 months. It must be comprehensively insured. We don't need any security. Even if I know some of these machines are very expensive in terms of even the cost, the MRI and all that. So we just don't need the security and an extra security. But again, we will be subjected to the normal credit appraisal. So you check on your books and even your accounts to see whether you will be able to pay the rentals without struggling your working capital. The other thing is on the solar. For this one is a unique one. This one is we do 100% with a residual value of 15%. For this one, it's a bit unique because we require you to give us a title deed or a logbook for you now to be able to secure the solar. For this one also, we do for 36 months. We also check on some of the whether there will be a cost. Is it reasonable in terms of the cost? Because what we look at, we want to see you saving in terms of the KPLC electricity bills. So we usually check on your bills, how they are. Then we see what you'll be paying on monthly basis. We see whether you can be able to save maybe 50% of the, maybe it may not necessarily cover all if you have a big farm or a big company, it may not cover everything, but at the end of it all, you find that the section that is being covered by the solar, there's a bit of savings. So you usually take what you've taken, the proposed solar asset. We see the installation cost and all that. Then we see your current bill, and we see how the region that the solar will be covering and do our calculation and see whether they will be saving on that. So that now we can be able to relieve you some of the high electricity bills by giving you the solar asset. So you just go and source for the solar, and then you come with the quotation. Then we do our due diligence on how the unit is. Our CBFAL, that is Corporate Africa Leasing, is they have technical team that will be able to see where if the OEMs that you get the unit from, confirm it's original and all that, and be able to support you on that. The other thing is I would like to say is the requirements. Basically, these are the normal requirements that when you go to a bank, you'll be required to provide. There is no much new. The extra document that I think comes in handy is the document that we call the quotation from the leasing company that informs you on the amount you're going to pay on monthly or the termly basis. So that document is the one that will advise you, depending on the preference that you make. Remember, we said leasing is like a package whereby you package maintenance, insurance, financing, telematics together. And then now we give you a one bullet payment on all that during the lease period. So that one comes in handy with that quote. We give you the quote, you see what you'll be paying per month or per term. Then you'll be able to be advised on what to pay. The requirements, maybe in a nutshell, I would like to cover some of the requirements that you required. These are things that I know as a business person, they are in your possession. You have the pro forma invoice. That one you can get from any dealership that you want to get the asset from. That one now advises on the total cost of the units, the type and the model, who is the dealer, and what are the specifications of that asset. That one now brings us to get that quotation now from the leasing company on what you're going to pay. As ourselves, we are saying we are flexible. For example, if you come to us and say, I want to do maintenance by my own, we will not limit ourselves and say, no, we are open to that. But we'd like to encourage you when you're doing maintenance, make sure that where you are getting your spare parts, and even you're doing it's somewhere that is reliable in terms of the support, not to indulge in whereby you get your equipment or your asset destroyed with fake spare parts. So we give that option for you to repair or to do maintenance for your fleet or your vehicles or your equipment. We are also flexible on the insurance part. I know as business people, some of us have their own agent, but what we encourage is that the insurance company must be in the bank's panel. I know in the branches, you'll be able to be advised which are the companies that are offering insurance out there, and they are in our panel. So for us, we are flexible to that. As leasing, we are flexible to that. You can do your own insurance, maintenance, and then we come up with a quotation without those maintenance and insurance. Then you subsidize our rentals to cover only the financing bit or the rental part of it. The other one is KYC. These are the IDs, KRA PIN and all that, certificate of incorporation for the company, memorandum of articles, corporate PIN, all that is what we require from you, and then we can be able to support you. For PSVs, for the SACCOs, majority of these documents are required, but again, we called the LSL. I know majority of us know that the route service line that is required for you to operate in a certain route, that's a document that we usually require. For every SACCO that is operating, it must be having that certificate for it to be allowed to operate a matatu business in Kenya. So even if it's in an individual, remember I said you can come with a letter from an authorized LSL SACCO, and we'll be able to support you with the authority from that SACCO, which has already been given that LSL by NTSC. So you just need a recommendation, then you come to us as an individual and say, my matatus that I'm going to get, I'm going to operate them with that specific circle, and we'll be able to support you on that. That's it, unless we have some questions. Maybe Peter, you can check whether you have some questions from the team.
Thank you. Thank you so very much, Jackson, for that great presentation. I think a lot of details. Team, let's appreciate Jackson as we try